Welcome everybody for coming back to another webinar. Today we're very happy to have the governor of the Central Bank of Brazil with us, Roberto Campos Neto. He's also one of the driving forces behind PIX, the payment system the Central Bank of Brazil has set up. And today he will tell us about the future of financial intermediation. Hi Roberto, good to see you.
Good to see you. Thank you for the invitation, Professor Markus. It's a pleasure to be here. And, hello, everyone. And thanks for everybody who's watching.
Thanks a lot, Roberto. Let me make a few opening remarks and then I give the floor to Roberto. So what we can see from the first figure is essentially there's a secular decline of the balance sheet of traditional banks. So the lending is going on. You see at the top, the lending is going down in the last decades. Significantly already. You see also the deposit taking of the banking is going down significantly. And if you look at the non-financial sector as well as a fraction of GDP in the United States, you see that's actually rising. And that's drawn from a paper by Buchak et al., which is a very recent working paper. Now, the question is a little bit, what are the visions, how the future of financial intermediation will look like? And I just want to outline 5 potential visions, and and then we can judge later on which one is more likely out of these 5, or perhaps even the 6th or 7th one. The first one is essentially that the banks and the money market funds will remain the dominant players as intermediaries. They will absorb a lot of the fintech companies like they did for P2P lending and so forth. They will tokenize their deposits and all this, but the banks will be primarily providers of financial mediations. The second vision is to say, okay, no, DeFi, decentralized finance, blockchains, this distributed ledger technology will take over and will take a much more prominent role, and institutions will play less of an important role. That's a second potential vision. The third vision is that actually big tech and tech platforms will take over. They will actually potentially produce even their own currency, some settlement ledgers, and they also provide lending ledgers. And so they will actually be the big players. The Amazons, the Ant Financials, and so forth will actually become the big financial intermediaries. And the fourth is, that the government will play an important role as well to provide utility ledgers, or in the 5th version, where it provides a very attractive CBDC, central bank digital currency, so government in a broader sense, including central banks. And it might even replace the deposits to some extent. And the banks become more like floating value funds rather than banks with deposit as at the moment. So there might be more options than these 5, but there's just some first vision for potential different ways we can go into the future. Now let me zoom in a little bit on the big tech component, so the third component with tech platforms. And because they're entering the financial and the payment services. And then there's the question, what can they do? And one argument is, and that goes back to some joint work I did with Jonathan Payne, is that platforms are natural providers of digital ledgers. They can actually provide so-called digital collateral by threat of exclusion from the platform. They can say, if you don't pay back your loan, you will be kicked out of the platform. And that gives an incentive to really, for many, many borrowers to pay back their loan. And the big tech platforms, they can also ensure that various borrowers and lenders, they voluntarily participate in such a lending arrangement or in some ledger arrangement. And the question is now, do they have some natural monopoly power? And do you want to essentially curb this natural monopoly power by providing a public outside option, like a CBDC or a programmable CBDC, to limit the rent extraction they can have? But on the other hand, if you do it too much, you destroy this exclusion power, and this digital collateral element is not so important anymore. So there's a balance, how much of an outside option the public or the government should provide, not too much and not too little. The other question is essentially, when there's a competition between the big tech companies and the banks, how much should there be interoperability and information sharing across the banks and from banks to the platforms? If there's no information sharing, you will see a segmented market, and hence there's less financial inclusion. And what you can show is actually the platforms typically would like to information share. So if there's regulation, open banking, also extending to platforms. The platforms want to do that, while the banks would be more reluctant. And the reason is that the platforms can actually make losses on the lending activities and recoup some of these losses then in the trading fee or charge on the platform activities. So they don't have to make losses necessarily in the banking business or in the financial business, because they can recoup some of these losses in some other form of the business on the platform business. So they have some loss-leading activity in a sense. This argues that for regulation, you would probably want to regulate and take into account the joint aspects, the platform activities and the banking and financing activities together, rather than having two separate regulators. Now, the other thing is, of course, everybody talks about artificial intelligence. So how does it impact financial intermediation? And of course, the two different artificial intelligence components to it, one is the predictive AI and the other one is the generative AI, like ChatGPT and other large language models. For predictive AI, you can improve the credit quality evaluations, you can better detect fraud or reduce money laundering, and you might even predict, what will be the settlement needs for a bank at the end of the day, and so you reduce essentially settlement frictions. For generative AI, you can see a lot of applications in the wealth management, in particular with robo-advising and other activities. So that's, AI will also play an important role. So let me conclude with the answers you gave us on the poll questions. So we had 3 poll questions. And the first one was about, how much should the government be involved in the payment system, for example? Should it just provide in the back for banks and fintech companies a payment rail? That's what 39% said. Should it be actually more visible also on the retail payment side, together with the banks, and even provide an app like what Pix does to every public? That's what 57% said. And should it offer a retail CBDC? That's 36% were in favor of that. Or should this retail CBDC also be programmable and tokenized and all this? Is 14%. So that's a small fraction which said it should be programmable. So I should say you could answer more than one question, and so hence the percentage numbers don't add up to 100%. Again, it's 39%, 57%, 36%, and 14%. The second question is, who should actually have access to central bank's balance sheet? Who can actually park some money with the central bank and borrow from the central bank directly? Should it be only banks? That's what 81% said, so huge majority. Again, the numbers don't have to add up to 100%. Also, fintech companies should have access to the central bank's balance sheet. 36% said this. And money market funds should also have access to the central bank's balance sheet. That's 36% said this. And finally, there's a privacy question. Do you think privacy will be more protected in the future as it is now? It will be only 38% thought it will be more protected. 62% thought it will be less protected than now. So before I pass on the microphone to the governor, I would like just to give a hint that if you're on YouTube, you can see actually down in the comments, you can get an executive summary of the presentation. So if you just want to get a quick overview as well, you can just read the executive summary with timestamps. So let me pass on now the mic to the governor, Roberto Campos Neto, and see what he envisions the future of financial intermediation will be, starting, of course, with the PIX, which Brazil has a technological leadership role in the globe. Thanks again for doing it, and looking forward to your presentation.
Thank you, Professor Markus. Thank you, everyone who's watching us. So I'm just gonna, have my presentation here. 1 second, so that I can share with you. I think you all can see it right now. So the idea is, I call this a view for the future, but it's actually a plan that we are implemented. So everything that we'll talk about here is being implemented as we speak. And so I will talk about the challenges, the implementation, and the implementations and the ideas behind. So I think we started a long time ago thinking about what would it look like in the future, thinking that we are in this process of digital transformation. And I guess the main point was that are we moving towards a tokenized economy? What we had the sense at the time is that eventually people realize that it's much more efficient to transact assets once you put an encryption around it and place it on some kind of DLT. So we started with the idea that this is a train that had already left the station, and that even though some of the implementation and some of the things that are happening are slower than what we anticipated, I think it's is where we're going to go. And I really like that phrase here on the bottom that says if the tokenization thesis hold true, then the 21st century may see the creation of regulated global token-based multi-asset networks. Here there's a question whether you're going to be able to be efficient with different networks or not, and we will discuss this a little bit, but I think it goes into that direction. So, talking about the tokenization of the economy, the main challenge is always how are we going to implement? I think people have the idea sometimes of thinking about those different blocks separately, and I think the efficiency is in the fact that, as I'm going to show you, they all converge at the end. So there's high efficiency gains, and a lot of work has been done on the trade, collaterals, on the transparency, the lower cost, the openness, the programmability, the fact that when you look at the system with programmability, you can add new functionalities and you can interact in different layers. So if you have to have one slide in your mind at the end of this presentation, that would be it. I mean, this is a summary of the whole thing. So this is 5 to 6 years worth of work in one slide. And I'll try to first explain what it is, and then we're going to go into the different boxes. So we have mainly 4 boxes. The first idea that we had is we need for people to really be engaged in this process. How do we engage people? Well, it was clear for us that the way to engage people is not to start talking about an open finance, from the very beginning, because people have a very hard time understanding what's the benefit that's going to come from it. So it needed to be something that people actually feel the advantage and the gain immediately. And so we thought if we had a payment rail that really achieves a larger part of the population, and people see it that made their lives easier, then we'll have a lot of people engaged. So we started thinking about what the instant payment will look like. We looked at different countries, and one thing that we knew from the very beginning, given that we already have these 4 blocks in mind when we started, is that for that to work in the way we wanted, it needed to be programmable. So you needed to be able to put smart contracts on the rail. The rail needs to have programmability elements. It needs to be able to program payments in the future. It needs to be eventually to block payments in a reverse way so that you can actually mimic credit card transactions on the rail. And so the idea is we needed to be programmable. And that took a while for us to understand what's the programmability that we want and how do we do that. But eventually it was done. Then the idea is eventually we need to connect this to other payment systems. And then came the idea that we needed to start a movement within BIS to connect the different systems. And I am part of the innovation hub at the BIS. We have Nexus that's already connecting some countries in Asia, and I'll talk a little bit more about that. But then the idea is if I have a rail and everybody's in the rail, and people start to get engaged in this payments, what I wanted to do is I want to migrate that to an open platform so that actually people can share the data if they want to, and they can get immediate comparability and portability in real time. So we move from the narrow open finance, open banking concept to an open finance concept, but has different implications because it's the only open finance concept that interacts with tokenization. And then I'll explain why I think that is a great advantage that a lot of other people are not talking about. And so the last block was, okay, now I have a rail. Everybody's using the rail. The rail is programmable. I can add new functions in the rail. I can link the rail to other payment systems in different countries. I can make it open data so that actually people are going to get the benefit of immediate comparability and portability, but I want everything to be tokenized at some point in time. So I need to insert the tokenization concept, and that's what the Drex, our digital currency, comes in. So those are 4 blocks that are already being developed, and I'm going to talk about them. And then there are 2 other blocks that I think we need to consider in the future, one of which is artificial intelligence. And I think Markus mentioned the predictive against the Gen AI. Here we are more in the first on the Gen AI. So how can we have advisory and improvement of the flows and segmentation of products that helps the client, especially with some elements of financial education. So this is what we were first. And second thing is the data monetization. So we think as we grow older, you should have like a savings of data. So you build data towards your life. Now what we do is we give data away from free. And we wanted this system, this marketplace of finance, to be an aggregator of data so that at some point in time, you're going to be able to have a digital wallet connected to it. And there is a couple of companies working on that project. And then eventually you can actually exchange the monetization of your data for tokens within the system. So this is like the whole idea, the whole view. And now I'm going to go into more specific details of what we are actually talking about. So first we start with this idea of what a platform look like. What is a CBDC? And we had an endless debate at the BIS on CBDCs with all the central bankers and everybody. And there was one thing that was very difficult always, which is what happens when you start playing with the balance sheet of the central bank. You're changing assets and liabilities in the balance sheet of the central bank. And I always had the idea that if we could have a digital payment or a digital currency, and it didn't involve any changes in the balance sheet of the central bank, that would be better because of the disintermediation. And we have a lot of work being done on that front. I mentioned here some of the literature. Most of the literature goes into looking at what happens when you have a disintermediation, or what kind of disintermediation, or different degrees of disintermediation. Some places, actually, you can survive with a very little disintermediation. In the case of Brazil, that wouldn't be the case in Brazil. But at the end, after a lot of debate, there were 2 groups of suggestions at the BIS. One was that you have the maximum amount that you can issue in the digital currency, so that you limit the disintermediation. And I always thought that was a very difficult idea to do in practice, because you could start having a premium on the digital currency related to the physical currency. You could start to have a process where the more people that have more information do it first. There was a lot of things related to the viability, in my opinion, to do that. The second camp was suggesting limitations so that you can equal the supply and the demand for the digital currency, especially when you limit it only to the wholesale part. And we can go into that a little bit later. I also thought that was very difficult to do in practice. And when we were debating that, it came to my mind that we don't need any of that, because what we actually need to do what we can actually do is we can make the digital currency being just a tokenized deposit. And so we came with the idea of the tokenized deposit. At the time, I gave a presentation on the BIS. People weren't so excited with the idea, to be honest. A lot of people wanted to do it. And then at some point in time, Agustin came to me and said, I like the idea. I don't like the name. I don't like tokenized deposit. He wrote a paper, and he called at the time the commercial bank digital money, which was, essentially the same idea. And we discussed it, and it was really good because his paper really helped us develop our idea. Then we talked about platform economy, and we have a lot of literature on that, and a lot of people are doing research on that. And more recently, we have the FinTernet paper, which is an effort, collaboration effort between Carson and Professor Nichelani. And on that one, we have like a view of the future when you have different ledgers that interconnect. And I really like the idea, but today, if you are in technology, you know that if you have 2 hyperledgers and you try to connect them, it's not that efficient. It's better to have different products in the same hyperledger than having So like, for example, if you have a Hyperledger bezel and a Fabric and you try to connect them, I don't want to go too much into the technology details, but there's a problem. There's a lot of efficiency problems that comes from that. So, this is what we took into consideration in designing what we have today. So we wanted to have this, like I said, tokenization around it. We wanted the tokenization to interact with the open finance. Open finance without tokenization, I think, leaves a lot of the goods on the table. Because if you think about an environment when you have open finance and tokenization, you can do digital auction of collateral. You can do programmable auction against tokenized payments. You can do atomized payments in a programmable way so that you can actually do different schemes of risk. So I can go on and on here. So we always thought that there was this missing piece that people didn't talk too much about, which is the interaction between tokenization and the open finance. So we designed a system to have all that, and I'm going to show you in a while. So we talked about the interoperability, composability, as I said, in this environment. So when you look at retail, now I'm going to go back to the 4 blocks and start talking about each one of them. So the first one is PIX. Like I said, it was a rail for programmable payments. Was very democratizing because we knew we would have a lot of people getting into the payment system. It was fast, it was cheap, it was transparent, and it was open, which was the most important thing for us. We looked at, when we started designing PIX, there was always a question, if PIX works so well, why do I need a CBDC, or why do I need programmability of money? And I think that was one of the questions that Professor Markus asked. And I think the programmability is essential because you are going to be navigating in an environment of encryption in a digital ledger, whether you want it or not in the future, in my opinion, okay? So this is what happens with PIX. So we can see how fast the adoption of PIX was in Brazil compared to some other countries. We are talking about almost 790 million keys. We have reached the other day 240 million transactions in one day. In Brazil, we have around 104 million bancarized people. So we are talking about more than 2 transactions per bancarized person per day. That's higher than any other country that we know of. And the adoption was very fast.
So
also, we have, yes.
Can you tell me, is it secret? How much does it cost to set it up, and how much are the operating costs of PIX?
The cost on the central bank was not so high because part of the cost rely on the banks that need to develop the platforms. But the standardization and the coding that was done in the central bank and the idea, it costed us around $3 to $4 million.
3 to 4 million, that's it?
That's it, yeah. And
for the banks, for the private banks, how much did it cost
for
for
the private banks? It depends because they were developing this together with other projects. Hard to say, but because we scaled this to 240 million transactions a day, now to keep the system running, it costs us around $10 million a year.
Okay.
Right now. Okay.
And how does it compare to the Indian rail, the Indian system? Is it comparable, or where would you see the big difference between India and
the Indian system had a different objective because they wanted the system to provide government services in a digital way. We didn't want that. We want that to be connected to programmability. It was designed with a different purpose. And because of that, the Indian system is not programmable. So it doesn't. So the digital currency doesn't interact with UPI the same way that we wanted to interact here. But it was actually built for a different purpose, and it was an older system than what we have. Okay.
And what fraction of the payments are programmed using the feature of programmability?
Yeah, we think this is going to scale up right now because I'm going to show you the new functionality that we have. And more we're going to programmable payments. Okay. One other thing is here on this graph, you can see how it increases bankarization. So as the total PIX users go higher, you can see that the total bank clients also go higher. So it included 71.5 million new users in the system. So it's really expanding the base. So at the end, all the money that the banks lost on the fees that they charge for the transfers, they made much more money on having more accounts more transactions and the programmability, which I'm going to show. So these are a couple of new functionalities. We're going to have the scheduling. We already have the scheduling peaks. We can actually programmable for future data. We can have the pick sack and pick stroke. This is more or less like the cashback that you can get in any store, but it's for free. And there is a difference here. Eventually, we can have a rail in which every cash register in every store can perform banking functions. Remember that in Brazil, we have more than 1,000 cities that have no bank branches, and sometimes they have no ATM machines. So people have to go to another city to withdraw money. So with that, we can actually make the stores sell less, sell more, and have less money at the end of the day at the cash register. And they can bring the customers to the store because the customers can actually use the cash register as an ATM machine. So this is something that we actually programmed. It's already happening. We have a lot of different ways of improving the mechanism for returns for people. And we just announced that we're going to have in a couple of months the contactless Pix. So a lot of people still use credit cards because basically they don't want to go into the app of the bank and digit numbers. So right now they can have the wallet in the same way they have with credit cards, and they just approach the cell phone and you can get charged. So this is something that is in the making. Also, we're going to have the recurring payments. So if you have a bill like Spotify or Netflix and you can program to have the payment every month, you can do that on Pix. And we have actually a lot more to come, but I wouldn't have time here to talk about all of them.
But can I just ask a quick question about the programmability? So yes. I can also program on my smartphone that the smartphone executes a payment in 2 weeks or something. It doesn't have to be on the rail. What's the advantage if it's on the rail?
No. You can program, but today, for example, you need to have a program that goes into a bank account, chooses a bank account. Today in Brazil, you have a very secure process of getting to the bank account. This is a rail that is already embedded into the app of the banks, and the programmability will be able to talk to the other functionalities. And if you program it outside, it won't have that feature. And in the case of Brazil, it's very difficult to do it anyways.
And another question, is it the case that, do you think Pix helped the traditional banks to keep customers and it didn't in favor of the fintech companies or platforms?
Well, I think there is an element that lowers the barrier of entry, because in Brazil, what we had is we had this company that produced ATMs, and this company was owned by the bigger banks. So if you want to start a smaller bank, you need to pay for this company to be able to use as an outlay for your clients. In the case of Pix, it's free for everybody, and it's exactly the same standard for everyone. So it lowers the barrier of entry. So it improves competition. Yeah.
You saw more banks entering the market? The number of banks went up?
We saw more payment initiators enter the market. We saw more platform banks growing, and we saw diminishing the barrier of entry for clients that need to withdraw money a lot because now they don't need it anymore.
I see. Thanks.
So the question is now going to the platform. How do we tackle this problem when we think about the cross-border? And this is another dimension of the problem that we talked a lot about during the BIS meetings. And I remember in the very beginning, we had this huge conversation that we didn't have the technology. And basically, it was very difficult to connect at that time a DLT system to a centralized system. And so the question is, how can this be better than the cryptos and the stable coins that already exist? It turns out that after a while, the solution was developed, and we have a solution for that right now. Right now, you can connect centralized system to a DLT just as fast as DLT to DLT. You can go into different solutions for that. Then the question becomes, okay, the technology is easy, but when you do a transaction in currencies, you actually need to do the settlement. And some currencies are non-convertible. So that there's a problem that arises from that. And we did it was a long story of research. And it turns out that the same people that created some of the DLTs, they also created mechanisms that could be used as settlement, which is the liquidity token pools. So the technology solution is already available. And it was funny because at that time we celebrated, we said, we have the solution, we have all the technology solution, we can do it. And then we didn't wake up from that. We didn't notice at the time that actually the hardest thing was yet to come, which is how about the governance? How do we connect different payment systems in different countries if we don't have a governance for that? And for example, different countries have different AML rules, CFT rules. In some, they have different tax systems. In some countries, when you do a transfer, you get taxed whether you're a person or a company, or whether you're local or foreign. You have different taxations. We couldn't connect systems with that amount of difference because the system doesn't have time to do a truncation digitally to select and to understand all these problems. So that was a problem for a long time. We talked around a lot. In this
Can you explain what the liquidity token pool, how does it work, this liquidity token pool?
Well, so it's like you have, the central banks have an amount of currency that is a tokenized currency sitting on a pool, so that when the market is closed, you can actually do the settlement one against the other. And here there is a trick on the technology when your currency is non-convertible, because then you need to, I mean, the programmability is a little bit more difficult. But if we go into that detail, I think we're going to spend a lot of time. But we can go into the solutions, the technology solutions, and I can explain it why for some countries it's easier from the others. Obviously, if you have a currency that is a full convertible, then it's much easier for you. In the case of Brazil, we need to do some adaptation. But going back to the governance, because I think this is a very important issue today, we are working with the G20 to make sure that we have a minimum taxonomy. The taxonomy means that countries who want to participate in this group of countries that are connected need to have a common taxonomy. This is actually being done now by Fabio Panetta, the central banker of Italy. And there is one issue that arose the other day, which is the liquidity gates. What is the meaning of that? So would I be comfortable that anybody in Brazil can withdraw a CD from a local bank and buy a CD from a bank in US and send all his money to US without any kind of rule or limitation? This is, I think, the question that needs to be answered. And if you want to do some limitations, how do you program that into the taxonomy or the governance? So this is the latest issue that we debated.
And the coordination will happen at the BIS or the Innovation Hub, or?
Yeah, I think the Innovation Hub is a good place for us to develop that. The G20 needs to be involved, and I think the CPMI is really working on how we make this taxonomy work for most countries. Again, not all the countries will join, but if you have 5 to 10 countries that are relevant to join, I think the others will come. If you look at what's happening in Nexus in Asia, other countries now are asking to join the system because it really diminishes the cost of transaction and improves actually the trade that you can do. Before I go further, I wanted to show you what I think this looks like. So eventually, you're not going to have an app of Bank A or Bank B or Bank C. What we think we're going to have in Brazil in 1.5 to 2 years is this financial aggregators. Some people call super app. Some people go to a different extent and say it's not really a super app. It's going to be more a marketplace for finance. But because you have programmability, you have open finance, and you have tokenization, what you're going to be able to have is you're going to be able to have one app or one place in which you get in and you have all your financial data in there. So imagine you are in the streets and you want to make a payment. You can press Pix. Probably it's going to show you the options of the banks that you have money sitting in. You can choose a bank. If you want to do credit, you can choose a bank. And most likely, because this is a webhook that has algorithms for every transaction, the banks will compete for that transaction and will give you the rate in which they will finance you in real time. You can actually have advantage, for example, if you have equity and it's the custody is in Bank A, Bank B can show you, okay, for that custody, I can give you a better price. So you started to have what we call comparability and portability in real time. And this is already happening today, even though we don't have these financial aggregators built, because today you can already go into the app of your bank and download information from your other bank and start comparing and doing things. And you are getting already the messages from the banks competing with other banks. So this is really doing a segmentation thing in the market, plus it's lowering the barrier of entry and improving the spreads.
So who
And then
provides this aggregator? Is it the central bank or is it Apple? Is it like a tech company? Or?
So today, I think we have 4 or 5 companies that are going after that. It's probably going to be a little bit like when you think about Yahoo and Google and all the, we don't know if it's winner takes all, if we're going to have segmentation. In this case, I have a feeling that we're going to have more than one, because I think depending on whether you are a high individual net worth, I think you're going to have a different marketplace from the more general public. But we don't know. So this is in the making. I've seen some pilots already. They're looking very good. And then you have the functions of the consolidated functions, which basically, if you work on IB on a bank, you know a product called cash management, which IB likes to sell to companies a lot. This is able to do cash management for everybody for free, basically.
But this aggregator will have all my financial information.
If you want to, only if you want to. Because you need to give the permission for every data and every product. You can limit the amount of data that you have. You can, for example, just want to have data on your bank accounts. You might want to have data on your products to get better products. It depends on you, right?
And there will be a financial regulator who regulates this aggregator?
The financial regulator will regulate the aggregator and everything that goes on with, and is going to look at the algorithms that are embedded in it to see, how the transactions are done. And it's also going to regulate the gates, the security gates that you need to have for smaller people to get into to the marketplace. Okay, this is in the making. But I mean, here you can have different combinations. In the Finternet paper, they go beyond this to put other things that are not regulated. We don't want to go into that right now. We just think, this is a regulated space. If we start putting a lot of things here, there's a privacy issue. There's a lot of issues with the scalability. I'm going to get into that in a moment. But this is, I think,
Can I ask one quick question? Sorry.
Sure.
If you take the Indian rail, you cannot do this aggregator, or you can also do it. You need this programmability of the underlying rail or not?
You do need the programmability. And remember that if you have an instant payment that is non-programmable, it doesn't talk to the digital currency, right?
Yes.
You can actually make it connect, but it's not as fast and efficient. Okay. So now we go into the open finance itself. I already talked about a lot of these things. I'm going to concentrate on actually the results that we had already. So we had 8 million in savings from people who have money, parked on their account, getting messages from other banks. We have efficiencies in credit card offering. We have the portability, which has increased 61%. Remember, this is just the beginning of this. We already had a lot of credit being done, originated in this kind of platform with comparability, more than 1 billion. We had 74 billion calls of APIs. That's 74 billion times in which people are migrating data from one bank to the other, or comparing data, or giving a signal to do comparisons. We have a reduction in the time that it takes to open an account. I can go on and on here, but this is in the beginning, and now it's beginning to be very exponential in terms of benefits for people who are involved in that. Then we have the payment for approximation, which is a journey that is connected to the open finance. The first project is going to be done with Google. We're going to have an event to announce it very soon, which means that in the Google Wallet, you can do PIX automatically by approximation. There's other elements of programmability that's going to be added into that. And then I'm going to the Drex a little bit, because this is, I think, what I wanted to focus my time, because it's very different from a lot of the other CBDCs. We are doing in a way that we think is efficient for us, given our constraints. So again, here are all the opportunities and challenges of Drex, of the digital currency. Again, going from the very beginning, we don't want to have this intermediation, but more than that, we wanted to have 3 dimensions of benefits that you cannot get on just a normal CBDC. We wanted to insert tokenization concept into the balance sheet of the banks. So if the banks are going to be blocking deposits and issuing tokens on it, which is our currency, then you're actually forcing the banks to think about assets and liabilities in a token way instead of thinking in an account way. And we think that that is a huge advantage in efficiency for the banks. So that is a dimension that it's not in any other CBDC. The other thing is because we are doing one hyperledger that concentrates everything, and I'm going to show you how this looks at the end. When you buy an asset and it migrates into the platform and is verified in the very beginning, then it becomes very easy to transact it. I mean, in terms of divisibility, doing collateral, and you remove a lot of the friction between the buyer and the seller once it's in the platform, right? In a lot of countries, you need to pay to register an asset. Here, the only thing you need to have the contract is a printer at home, because it's in the platform and it's very easy to do it. So let's imagine, for example, you're buying real estate in the US right now. You know, you have to have a escrow account, you have to have a lawyer on one side, lawyer on the other side. You don't need any of that if the asset is in the platform. And again, we can go on how you do that with security and privacy, because this is still one thing that we need to improve. But it's very easy, and the cost of transaction goes lower a lot when you have that, okay? This is more or less what it looks like. And this is really like a design. So you have the first two layers, which basically is what we see as an open finance. You have the aggregators and you have all the apps, right? And they have all the oracles connecting them. You have a multi-layer system. And then when you look at the protocols, basically, this is the instruments that we have in terms of protocols and products. This is where gives the possibility for smaller guys to get in the platform just using the protocols. So you can segment the market. And then the two last layers is basically the tokenization concept that we have. So you have the assets and the settlement, you have the native token, and then you have a way out for the cross-border, for the digital wallet, and for other services. So this, in a nutshell, is more or less how we connect everything when you think about the technology, okay? And again, the three layers of efficiency, the bank efficiency, the digital payments, and then here there is also this big issue whether this is a wholesale or retail. I don't like so much to think about in this division whether it's wholesale or retail. I think it's both. And here is the way we show in a graph how we think it's going to work. So basically you have one part, which is the relationship between the banks and the financial institutions, and the other part is the relationship between the financial institutions and the clients. And so this at the end is both wholesale and retail. And I learned from PIX that you don't know whether it's going to tilt towards wholesale or retail. So when PIX started, the first tickets were higher volume. And so at some point in time, we thought, okay, this is mainly going to be used by companies. And the opposite happened very fast. Once people realized that this was actually easier to use, it was cheap, was transparent, was fast, it moved from being something that was going to the wholesale direction to a retail direction. Mm-hmm. And here, if you think that once you buy the asset and it's in the platform because you use Drex and it's in the hyperledger, it's so much more efficient for you to actually raise money against the collateral, to do divisibility, to do auction, to connect that asset with atomized payments and programmability. So we think at the end is going to be both wholesale and retail. And I think for people in general, there's going to be a huge advantage from using Drex because it's going to make the asset more negotiable in the platform. So
can I ask you, so for
Sure.
seizing the assets, let's suppose there's a bankruptcy case. How does it then work then to seize the assets? Is it also very easy to seize for the lender?
Yeah, it's, in our view, it's not very different from what you have now because it's in the platform. So mainly you have the negotiations within the nodes. You have the oracle, which is the one distributing the information. And then by a centralized command, you can actually block block negotiations and block assets. So if anything, I think it's easier than it is today, and the bureaucracy is less. You're going to have less bureaucracy to do that. But there's a lot of details on the system that we haven't solved yet, for one reason that I'm going to get into that very, very soon. So I'm going to skip this one. So this is basically where we are right now. There is one problem that hasn't been solved, which is if you take any hyperledger and you think about the nodes doing negotiation amongst themselves, if you scale that up, the platform collapses. So today, with the technology that exists, you don't have the privacy, the programmability, and the decentralization when you scale up, right? You have a couple of solutions for that in the DLT environment. You have one that is called token shield solution, which is basically you blur the transaction with other transactions so that you don't know which one is actually the transaction that is happening, because otherwise everybody's going to be able to see that transaction. We are working on a solution. I actually had a meeting with Microsoft. So Satya from Microsoft was in Brazil last week, and we talked about that. So Microsoft is working with us. Many other companies are working with us.
Just to understand this,
sorry?
What this trilemma, is Ethereum satisfying all three desired features? Or so this trilemma, I understand you can't have privacy, programmability, and decentralization at the same time. Is this what this trilemma is?
The problem is you can have the three of them, but you cannot scale them.
I see. Okay.
You can do it. And again, the solutions that we're working are making us believe that we're going to be able to do that very soon, because we are being able to increase the number of transactions, but not yet to a number that is comfortable for us. So the solution here still remains. And again, there are a lot of people looking for that solution. And by the way, if you find a solution for that, most likely you're going to get to the conclusion that you can do banking in a different format than what is being done today. That's for a different webinar.
But what does the solution involve? You need to invent a new algorithm, some smart zero proof something?
Yes.
Or is it more technological? You need better computer power? Or what?
Yeah, the solution that people are working now is having different layers. So if you have different layers, when you interact between the layers, you keep the privacy because you don't really know from which layer you're going, from which layer you are getting it. So you can add more layers. The problem is becomes very complex. So again, I am not a deep tech guy that knows all the things behind that, but I've been looking into that for a while right now. And because the central bank, some other central banks like Korea, they are working on the same solution. And they have big tech companies in the US working trying to find the same solution, because this changes a lot of things in the financial industry, I think.
So can you outline, let's suppose we solve this challenge. How would you then see the whole financial intermediation changing over time?
If you solve this challenge, then you're going to be able to have a huge hyperledger with different assets, different people in it, doing transaction, and you could still be able to you could still be able to program it and to have privacy. So people won't be able to see what other people are doing. We have to remember that DLTs were built by people that actually wanted to have transparency with no privacy. The DLTs were built, by guys at the time, and one of the main objectives, we want everybody to be able to see what everybody else is doing. So we are taking the benefit of the ledgers, but there is one component which was built into it that, for our purposes, needs to be modified.
What about cybersecurity? If you have this one mega hyperledger, isn't this prone, if this one hyperledger goes down, there's a cyber risk as well? Or would you say the bigger we combine ledgers and make one hyperledger, there's more cyber risk? Or wouldn't say that's not an issue?
I think combining different ledgers has more cyber risk, because once you have the communication from one to the other, the gates need to be built in different ways compared to when you are inside one. But again, this is debatable. I've had this debate with tech guys, and you have people that think different way, and also depends on the technology that is coming on that. Because every day now we have new technology for hyperledgers, and we are doing things today that we didn't think was possible a year ago. I'm not saying 2 years ago, like a year ago. So like the container solutions and things that are actually happening right now, are advancing in that very fast. Okay.
But you're talking about decentralized or centralized ledgers?
Everything here is about centralized ledgers. In this case, we're using our Hyperledger Bezel.
Yes.
And the idea for us as we start this is to have the Hyperledger Bezel being the ledger in which the Drex will exist and will interact with open finance, so that you can connect the financial information from banks into the Hyperledger.
So I have another question. Perhaps it goes a little bit to the open finance element. If I want to make a payment saying, okay, if in 2 weeks the stock index reaches that point, I would like to transact, will the bank see, or the counterparty see, that I have programmed some payment conditional on some event in 2 weeks? Who has the information?
Yeah, on the platform that we built up to now, this is not possible. So you're not going to be able to program payments on different assets as of now. Probably in the future, you're going to be able to, especially when you connect everything. And when you do, nobody's going to be able to see it. Only the Oracle.
I see. Because you could also build it in a way that there will be no surprises. So if there's a huge, payments coming up or some huge transactions coming up in 2 weeks, it might be useful for a central bank to see it in advance.
Yeah, but we think
for financial stability reasons.
Yeah, but we think the other side of the coin of this benefit is that people might suspect that the central bank is trying to control everybody's life and invade privacy, and we think that would be very bad in terms of reputation for the system. So we understand there is a benefit. We are not. We don't think this is a good trade-off. And so going into the pilots of Drex, which is what we're doing right now. Right now we have 16 groups, 70 companies. Again, here the focus that we are very interested right now is the privacy. So there's a couple of solutions that we are working. One is called Zeta, the other is Starlight. I can go on and explain the difference, but it's basically a way to improve the privacy as we scale up the system. There's also different solutions for cybersecurity. Right now, we have a pilot that you can do already P2P against the GVP in terms of bonds, and I have a little bit of a drawing on how that works. So we can do public debt against a GVP, and that you don't have a lot of security, privacy involved into that. So that's why we chose that to start the test, and this is already being tested. So it's a permission environment. So here we are working on the pseudo anonymity, and here is how we are trying to work the solution and broadening the scope with third-party smart contracts. And again, we are really trying to put other players now into the platform to see, how the interaction would look like. Again, this is a work in progress. We are advancing very fast, and we think by mid next year we're going to have a much more clear picture of what we can do in terms of the platform. This is the phase 2 in which we do more products. So we start to have transactions with RWA. We can do FX trades, and we have the liquidity pool. And again, I'm not going to go into everything here. I'm going to leave some times for I'm out of the time. So this is more or less what the plan looks like between now and 2025. And again, we have the pilot 1, which is in place. Right now, the main issue is to be able to find the scalability for the platform, as I mentioned to you, and then we are going to start to interacting. And again, I think one thing that probably I didn't mention enough, because I think it's highly relevant, is the interaction between tokenization and open finance. I think it gives you a wide space of opportunity that today doesn't exist. And then to end, I would say this is not a view, it's actually a plan that's being implemented. And I think we're going to have everything that I said here ready for people to use in about 2 years. Okay, so thank you very much. Sorry for the long explanation for talking so much. And thanks for the question, Markus.
Yes. Do you have another 2 minutes for?
Sure.
Yeah, so this open finance you mentioned in the beginning, I control my own data, but I can also give my data away against some payment. Is this correct? I can get some tokens if I say, okay, I give this data to some bank or some other bank or some healthcare provider or something like that. Is this correct? Is this also in the plans?
No, there are two concepts here. One is the open finance, in which the bank is gonna, say to you, if you open the data, I can offer you different products, and you're gonna say yes or no. There's no token involved against that. The other thing is, as we build the platform and the marketplace of finance, every transaction that you do financially everywhere every transaction is going to go down to a ledger, and that's going to be transmitted into a digital wallet, and that's where you're going to store your data. And when you have data enough and people are interested in your data, you can exchange your data for tokens, because today this is mainly captured by the big techs. And we think the marketplace can be a way in which you can start moving away from that, in which people can actually monetize their own data. It's about people being able to monetize their data in the future. And we want to, build the system so that when and if that happens, it's possible to connect.
Then about programmable payments, I have another question. So I would like to draw an analogy. If I make all these contingent payments on, in the future, it's a little bit like a limit order. No? If I want to buy a stock, I submit a limit order. If the price is that, I want to buy it, or otherwise not. And knowing all the limit orders is like knowing the limit order book. And there's an analogy in there. There's a lot of literature on studies, how informative a limit order book is. You don't think there should be an aggregated limit order book or something where you don't know the identity of the payments, but at least the other party knows how many payments are coming up to prepare for it. Or in the bigger picture, what I want, everything moves faster. All execution happens in milliseconds, and the reaction time is not speeding up in terms if there's financial regulatory problems or some financial stability issues. How to keep up? The speed is so much faster now, and how do you make sure that the lender of last resort feature and all the other stability measures are speeding up as well?
Yeah, I think you are much further than we are right now. So you're thinking well into the future. Right now, the system that we design, when we say programmable payments, is like the bills that you have that you need to program payments.
Okay.
Now, obviously, when you extrapolate that in a digital ledger, if you have programmability and you interact with the ledger, eventually you're going to be able to do what you're saying, which is, I want to do payments subject to something happening, because you can construct that into the programmability. At the end of the day, it's a smart contract. To be honest with you, we haven't thought about how that's going to work in the future. Right now, we are trying to do the deliverables, and right now for people, it's very important to have the bills that you have every month to be able to program that. And after that, there is one thing that I think is very relevant, is if I can block reversely payments into the platform, I can mimic the function of credit cards in Pix. So we don't need the traditional credit card anymore. And I think that is a huge advantage for people, because today, when you think about the circuit, the arrangement of credit cards, you have the merchant who has to pay a discount when he wants to front load the receivables. You have the acquirers, you have the issuers, you have an issue that is very important in Brazil, which people are using, the rail of credit from an issuer to do other kinds of things. At the end, if this is programmable into Pix, you can actually do credit card functions at a much cheaper rate. So we are going into that after we do the programmability. But I see your point. This, very far from what we are right now in terms of what we can do. But I think eventually we're going to get there.
Great, thanks a lot. So, but just perhaps a final word. There are many winners, as you point out, because efficiency gains are there. There are probably also some losers in it, but that's probably hard to identify. But if you don't keep up with the development, I guess you lose out automatically, because things are changing. You can't stand still. And I'm glad to see that Brazil is on the forefront and is moving things ahead. If you had to pick another 2 or 3 countries who say they're also moving in the same direction, they're also close to the forefront next to Brazil, can you just point us to other central banks or countries?
I think Singapore is doing a lot of interesting things in the same space. Some of the Nordic countries have done payments, and they're advancing on payments. Different countries have different realities. and I think have different limitations, because it's not about only the plan, it's about being able to execute. So for example, when I think about PIX, in the beginning, do you think it was easy to convince all the banks to join PIX? It's not. But in Brazil, we had a way to enforce that. So banks were obligated to use PIX. That is not true in every country. One other aspect is the regulation. So in Brazil, we have two regulators that work very closely. So when we have an idea, both of us, we sit together and we decide it, and it's done. Some other countries like US, you have many regulators and they have different opinions on many things, and becomes much more difficult to implement. So again, I think it depends on the reality of every country. But we think if we're able to deliver what I showed here today, we're going to have a very advanced system in terms of financial intermediation. And as you said, there's a lot of winners. And I think the big winner is that you promote inclusion, you segment the market, and you generate a lot of efficiency, and you create a lot of new businesses that today they don't exist because you don't have a financial system that is efficient enough.
Have you ever calculated what percentage of GDP, is this 1% of GDP or 0.1% of GDP? Is there any way to quantify it?
I ask that question to myself all the time. Okay. And I ask the people here at the central bank, we should be able to do some kind of study to show, what is the gain that's coming from that. And what people always tell me, yeah, we will, but let's deliver everything first. So.
Very good. So thanks a lot, Roberto. It was fascinating to learn this. I hope you can push it further and all your projects will become reality very soon. And it's great that you push it forward and bring us closer into the future.
Thank you, Marx, and thanks for everyone who's watching us. Thank you so much.
Thanks for everybody, and hope to see you soon again. Thanks for watching.
Okay, thank you. Bye-bye.